The crypto market just experienced one of its most brutal wipeouts in years, and many investors now believe the cycle top is already behind us. To them, the best is over, and the rest of the year is destined to be a slow decline. But what if this crash wasn't the end at all? What if it was the reset before one last explosive, liquidity-driven rally? In this video, we look at what three major analysts are seeing right now and why the next move could catch almost everyone by surprise. Despite all the fear and confusion, there are still experts who believe a significant rally is forming beneath the surface. Tom Lee, often compared to the Michael Saylor of Ethereum, argues that sentiment is completely detached from reality. Liquidity has tightened, largely because the government shutdown slowed treasury spending and pulled money out of the system. Stocks weakened, and whenever stocks wobble, crypto feels it even harder. But he believes this fear is temporary. Liquidity issues tied to the Treasury General Account and the Federal Reserve's balance sheet should ease in the coming weeks. Quantitative tightening ends around December 1st, and the next Fed meeting on December 10th may bring another cut. In his view, the Fed is missing early deflation signals, and once policy shifts, Bitcoin and Ethereum could benefit quickly.
Well, number one, as your viewers know, people have gotten pretty bearish in the last couple of weeks because the government shutdown kind of has deprived the economy of money. And then the Treasury Department isn't dispersing funds, so their liquidity has shrunk. And it's caused stocks to actually wobble. And every time the S&P is down 2 or 3%, or AI stocks are down 5%, I think people get really cautious. I think, first of all, bullish sentiment is not even anchored properly. People become so hesitant. I think everybody thinks there's a top. Here's the thing. When everyone says there's a top, there cannot be a top. The top in the dot-com was because nobody thought stocks could ever fall. They actually thought we were entering like an era of continued prosperity.
Cathie Wood shares a similar perspective. She sees the current weakness as a short-term issue driven by tightening conditions, not a collapse in fundamentals. Even while the Fed attempts to ease, the system is still restrictive, which has amplified fear. She thinks we are close to a turning point, and once liquidity starts to improve, confidence will return much faster than most expect.
What I'd like to do is summarize our position. I know the markets are extremely nervous right now. The equity market and the crypto markets especially. And we think we understand why, and we also think this too will pass. Because there are some very short-term reasons, mostly having to do with liquidity drying up, again, very short-term, associated with Treasury and Fed balance sheet, or the Treasury General Account and the Fed balance sheet primarily. But we think that they will clear up within the next month. We have, first of all, quantitative tightening ending on, I believe it's December 1st. And then the various liquidity tightening moves have to do with the Fed reducing its reserves. We're now down to 6.6 trillion. And at the peak, I think we were close to 9 trillion. The Treasury General Account is at 940 billion. Normal over the last 3 years has been 600 billion. So the Treasury, because the government is shut down, is building cash and not releasing it into the system. By some measures, and we'll go through the charts, while the Fed is easing, it is still quite restrictive. And so we need to hit that tipping point. And we do think that the next Fed meeting, which I believe is December 10th, will be the next decision, that the Fed will take interest rates down again. Again, this is short term. I don't like what we're hearing from the Fed because I do think that they are missing some deflationary signals out there.
Coinbase Institutional recently supported this idea, stating that October's sell-off wasn't the end of the cycle, but the reset the market needed. They highlight that excess leverage has now been flushed out, core fundamentals remain intact, and institutions are quietly rotating back into the safest, lowest-risk areas of the market. Their data shows that the most recent liquidation wave was the largest in crypto history, wiping out massive long positions. If you were caught in that move, you weren't alone. Traders across the industry were positioned for a breakout, and almost all of them were wrong. From my perspective, anyone who has followed this channel knows I track Bitcoin cycles closely. Historically, Bitcoin tops about a year and a half after each halving, and the last two cycles lined up nearly perfectly with where Bitcoin peaked this year. Long-term holders sitting on huge profits likely sold there, helping create the biggest liquidation event in crypto's history. Unfortunately, the government shutdown hit at the worst possible moment. Right at the start of October, which is typically a strong month for blow-off moves, liquidity dried up, uncertainty spiked, and investors moved towards safer assets. But looking back at the last two shutdowns, Bitcoin rallied hard after both. That is one of the reasons I'm still optimistic. ETF flows also support this idea. If the true cycle top were in, we would expect aggressive outflows, but instead, we've only seen a mild pullback. Earlier in the year, we actually had larger dips, and flows continued upward afterward. Nothing about the current behavior suggests a final top. The charts add another interesting layer. Bitcoin tested the $100,000 level several times, dipped below it, and bounced back, with the 50-day moving average still acting as support. The next major signal is the upcoming death cross. In crypto, the death cross is often misunderstood. Most of the damage happens before it forms, and historically, it often marks a bottom rather than a collapse. The opposite tends to happen with the golden cross, which usually follows strong rallies and signals exhaustion. With the death cross likely within days and most of the selling already behind us, this could be setting the stage for a strong rebound. And with the government reopening today, the timing becomes even more interesting. At this point, my view is 70-30. 70% of me still expects new all-time highs by the end of the year, but 30% remains cautious. Tomorrow's CPI report is the biggest unknown. If inflation rises, it could weigh on risk assets. If it falls, we could see a powerful move higher. The next few days will be volatile, but based on history, technicals, and flows, I don't believe the cycle top is in. If this breakdown helped you make sense of the recent chaos, make sure you subscribe so you don't miss the coming updates. Leave a comment with your take on whether the cycle top is in, hit the like button, and share this with someone who needs clarity during all the volatility. Big moves may be closer than most people think.